Hey everyone, welcome back to the channel. Today, we're diving into something that's got a lot of families buzzing with questions. The $330 child tax credit payment that's been floating around in conversations lately. Specifically, is it coming your way in March 2025? I mean, who wouldn't want an extra $330 per kid showing up in their bank account, right? It's the kind of thing that could cover a month of groceries, a pile of school supplies, or maybe even a little treat for the parents after bedtime. Don't we deserve it? But here's the deal. There's no official federal $330 child tax credit payment scheduled for March 2025. At least, not yet. That doesn't mean the child tax credit isn't worth talking about, though. Oh no. This is still one of the biggest tax breaks out there for parents, and there's a ton to unpack. We're going to dig into what the child tax credit is, how it works, who qualifies, how you can snag that refundable portion through the additional child tax credit, and even peek at some legislative chatter that might shake things up down the road. So, grab a snack, maybe some goldfish crackers if you've got kids running around. And let's break it all down together. Oh, and if you stick around to the end and find this helpful, please hit that subscribe button. I'd love to keep bringing you the scoop on money-saving tips like this. Let's get into it. All right, first things first. What's this $330 child tax credit payment everyone's whispering about? Well, as of right now, March 14, 2025, shout out to Anthony Lane, who's been covering this, there's no standalone $330 check dropping from the federal government this month. I know. It's a bummer to hear if you were hoping for a little cash infusion, but don't click away yet because the child tax credit itself is still a goldmine for families, and there's a lot to understand about how it can put money back in your pocket. The standard child tax credit for 2025 is up to $2,000 per qualifying kid under 17. That's a hefty chunk of change. And if you don't owe a ton in taxes, you could even get up to $1,700 of that back as a refund through something called the Additional Child Tax Credit, or ACTC. So, while $330 isn't a specific federal payout right now, it's worth noting where that number might be coming from. Some states, like New York, have been doing their own thing. Back in August 2024, they sent out payments of up to $330 per child through their Empire State Child Credit. Could that be where the confusion started? Maybe. Either way, we're here to clear the air and make sure you know exactly what's up with the federal CTC so you can maximize what you're entitled to. Let's zoom in on the child tax credit itself, because this is the backbone of the whole conversation. The CTC isn't just some random deduction that nibbles at your taxable income. It's a straight-up credit that chops down the taxes you owe, dollar for dollar. For 2025, you can claim up to $2,000 for every kid who qualifies, and that's per child. So if you've got 3 little ones under 17, we're talking a potential $6,000 off your tax bill. Pretty sweet, right? Now, here's where it gets even better. If that $2,000 credit is more than what you owe in taxes, you don't just lose the extra. It's not a use it or lose it deal. Instead, up to $1,700 of it can come back to you as a refund through the ACTC. Imagine you owe $500 in taxes, but you qualify for $2,000 from the CTC. After wiping out that $500, you could still get $1,500 back. Well, technically up to $1,700 because that's the refundable cap right now. That's real money hitting your bank account, not just some paper savings. It's like the IRS saying, "Hey, thanks for raising the next generation. Here's a little something back." So, who's on the list to get this? Eligibility is key, and there are some hoops to jump through. But they're pretty straightforward. First off, your kid's got to be under 17 by the end of 2025, so if they're turning 17 on December 31st, you're out of luck for that year. But if they're 16 all year, you're golden. They need to be your child, son, daughter, stepchild, foster child, or even a sibling, grandchild, niece, or nephew, as long as you're claiming them as a dependent on your tax return. That's right. You've got to officially list them as your dependent when you file your Form 1040. They also need to be a U.S. citizen, national, or resident alien with a valid Social Security number. No exceptions there, because the IRS is strict about that. Plus, they've got to live with you for more than half the year. Think at least 6 months and 1 day, so if they're bouncing between homes, you'll need to figure out who gets to claim them. Oh, and one more thing. The kid can't be pulling their own weight financially. If they've got a part-time job and pay for more than half their own expenses, like rent or groceries, they don't qualify. Makes sense, right? The idea is to help parents who are footing the bill. Now, let's talk money. Your money, specifically your income. Because that's where the CTC starts to taper off if you're raking in the big bucks. For single filers, the credit phases out once your income hits $200,000. If you're married and filing jointly, it's $400,000. Above those limits, for every $1,000 you earn over the threshold, the credit drops by $50. Let's break that down with an example, because numbers make it real. Say you're a married couple with 2 kids, and your combined income is $410,000. That's $10,000 over the $400,000 limit. For every $1,000 over, you lose $50, so $10,000 means a $500 reduction. Normally, you'd get $4,000 for 2 kids, $2,000 each, but now it's down to $3,500. Still not bad, but it shows how the phase-out works. If you're a single parent making $210,000 with 1 kid, same deal. $10,000 over $200,000 knocks your $2,000 credit down to $1,500. The higher your income, the less you get, until it zeroes out completely if you're way up there. How do you actually get this money? It's not like the old COVID days when checks were just mailed out. You've got to claim it on your tax return. That means filing a Form 1040, and you'll need to tack on Schedule 8812 to figure out your CTC and any ACTC refund. Every qualifying kid needs a valid SSN. So, if you've got a newborn, make sure you've got that sorted with the Social Security Administration before tax season rolls around. Filing electronically is the way to go. Faster processing, and if you're due a refund, you can set up direct deposit to get it straight into your account. No waiting for a paper check in the mail, which, let's be honest, feels like it takes forever sometimes. The IRS has a whole page on this. Check out their official child tax credit resource if you want the nitty-gritty. But the process is pretty simple once you've got your ducks in a row. Let's zoom in on that additional child tax credit for a sec, because it's the refundable part that can really make a difference. To even qualify for the ACTC, you need at least $2,500 in earned income. Think wages, tips, or self-employment cash, not just investments or savings. If you've got that, and your CTC is bigger than your tax bill, you can get up to $1,700 back per kid. Here's an example to make it click. Say you're a single mom with 2 kids, and you earn $20,000 from your job. Your tax liability is only $300 because of deductions and stuff, but you qualify for $4,000 in CTC, $2,000 per kid. That $300 gets wiped out, leaving $3,700. The ACTC kicks in, and you can get up to $1,700 per child. so $3,400 total comes back as a refund. That's huge. It could cover rent, child care, or a much-needed family pizza night. Without that $2,500 income minimum, though, you're out of luck for the refund part, so it's worth keeping an eye on. Okay, so where's this $330 idea coming from, if it's not federal? Well, there's some buzz about changes to the CTC that might be mixing things up. On the federal level, folks like Senator Josh Hawley have tossed out ideas like bumping the credit to $5,000 per kid. Wild, right? That's not law yet, just talk. But it shows where things could head. Meanwhile, states are stepping up. New York's Empire State Child Credit paid out up to $330 per child last August, and Governor Kathy Hochul's pushing to juice it up even more. $1,000 for kids under 4, $500 for ages 4 to 16. Other states might follow suit, so that $330 rumor could be a case of wires getting crossed with state programs. For now, though, the federal CTC is holding steady at $2,000 per kid for 2024 to 2025. With that $1,700 ACTC refund option. No March 2025 payout, but filing your taxes right could still mean a nice chunk coming your way. So, bottom line? No $330 child tax credit payment is hitting federally in March 2025. But the CTC is still a powerhouse for families. Up to $2,000 per kid, $1,700 refundable if you qualify. Check your eligibility, age, residency, income, all that jazz, and file that return with Schedule 8812 to cash in. Keep an ear out for legislative updates, because if those proposals pass, we could see bigger credits down the road. For now, it's all about working the system as it stands. All right, folks, that's the mega breakdown on the child tax credit. Hope it cleared up the $330 confusion. If you found this useful, or if you're a parent who's snagged the CTC before, drop a comment below. I'd love to hear your story. And hey, if you want more money-saving breakdowns like this, please hit that subscribe button right now. It's free, it's quick, and it keeps us rolling with content you'll love. Thanks for hanging out through this epic rundown. Catch you in the next one.